G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So the topic for this video, you're going over the recent job numbers that came out, which is the unemployment rate and non-farm payrolls, and see how that shook up the markets. So the stock market, the crypto market, and to see, where it's tracking and some employment charts to finish off the video. So first up, we have the economic calendar, and we had PMI first. Okay, so that morning for me, 12 a.m., and it came in better than consensus, 51.5, 51.1. Okay, and if you go down to the red again, and we got non-farm payrolls. Okay, this is critical. I think the markets, you'll see what happened in the markets, but not pretty. Okay, and the reason they freaked out was because of the non-farm payrolls numbers, I think. So the consensus was 160, and it came in at 142. It came in significantly lower than the consensus, and previously was 89,000. So less jobs added than expected, which is not good. And then unemployment rate, another critical number. We got a consensus of 4.2, and previously 4.3, and it came in at 4.2. So it came in as expected. It did tick down, but the non-farm went below expectation, which is not good. So that was the bad print there, and I suppose a half decent print for the unemployment rate for that one. And here we got the stock heat map. So we got the tech stocks, your Apples, your Nvidia, AMD, Qualcomm, and all the rest of them. But it didn't do so well. You can see it's a lot of red on the day, and Nvidia down 4%, which is quite terrible. Then you got the technology services, and you got electronic technology and electronic technology services. So Microsoft down 1.6%, Google down 4%, Meta got smacked as well, 3%. So you see these really bright red ones are the worstly impacted stocks, and the darker they go, and then into the green is not as bad. Okay, so that is those ones. And the Amazon, retail, it's down 3.5%. Tesla down here, 8.5%, got really beaten down. Tesla got destroyed in yesterday's session. And then, that's pretty well it for those ones. The JP Morgan didn't do too well, 2%. And across the board, Netflix, and you can go across and see yourself, but very, very nasty day. And due to the non-farm payrolls, because the unemployment did come down, which is good, but the non-farm payrolls came in less than expected, which is a bad sign. So there's a stock heat map. There we go into the crypto market, so Bitcoin, and how well that fared up in the SA session. As you can see on the daily candle, didn't do quite well either. So from top of the candle to the bottom, 7.79%. So 8% down day. Got to go from the top of the body. It was a 6.5% down day in a week, and then it closed back up, basically 4%. All right, so down 4%, and back down to this trend line. Okay, downward sloping trend line, parallel channel. It's been stuck in since pretty well March this year. Okay, so we've been zigzagging up, down, up, down, up, down, up, down, but in a downward sloping motion, and it's looking quite pretty for Bitcoin. As you can see, this cluster here from February, 51K is where I see it going. Okay, and when the rate cuts arrive, I believe will happen at this meeting in September, the Fed, whether it's a 25 basis point cut or a 50 basis point, will be a determination of how much it moves. So the bigger the cut, the bigger the move. Smaller cut, obviously smaller move. So if it's 25 basis point, it won't do a lot. If it's 50, then I think the markets are going to really tank. That's my opinion, because they see weak data. Okay, they're cutting aggressively to support the economy because the economy is in trouble. They're not cutting aggressively to make themselves look good and just to do people a favour. No, they're doing it to respond to the labour market, because I think the inflation numbers are quite good for the Fed and they're quite happy with them, but just the unemployment data is, it's on the uptrend, okay? And non-farm payrolls didn't do too well, and I talked about job openings which are declining rapidly from 2022 to now. They're going really, really bad, and it's recessionary the way it's trending down, okay? So the Fed looks at all these different data points, all right, and doesn't give a shit about Bitcoin, but end of the day, Bitcoin reacts to it. It's a high risk asset, and it'll trade down on bad news. It's like a tech stock. It's very volatile. So that's Bitcoin, and it'll come down to 41k eventually, like I keep mentioning. So you got the 2022 low, okay, got the summer low 2023, and eventually down to this cluster of lows at 41k. And if you click on the risk metric real quick, we're at 31.7. All right, and it down to 41k. With time, the trend's up. I do believe it should reach around the 10 risk level, okay, as this number will keep rising with the channel. All right, so if I bring up the lower band and upper band, all right, and if I logarithmic, you see this rises with time, okay, this trend's up. You see this curve, it's quite neat. Bitcoin price, okay, and then once it just keeps going up and up and up. So by the time it gets to this level, which is quite basically towards the end of the year, if I draw a line and I go to there, and if you really want to make it nice and neat, all right, just underneath it, this is a rough projection. It keeps rising with time. So this is a 0 level, okay? And the 10 level will just be above it, all right, at around 40k, okay? So if you want to even look at even properly, there are lines as well. I turn performance mode off and you can see it better. Okay, so your 10 level will be around here at 44, that's 20 level. And the 10 level is just below it at 37k, all right? So this trends up like this line here, but a bit lower. It'll be around the 40 odd K level, okay? At 10 level as it gets towards the end of the year. So that's where I see it going. Risk metric, that is Bitcoin. Now the stock market did pretty badly on the day. It's down 1.73%. And we broke below this support level. It's 54.45. So obviously we dropped below this one and we retested it and then bam, straight down. So it's looking like it wants to head down to 5,100, okay, eventually. And then deciding from there whether it wants to go higher or just go lower. All right, so here's the determinant level. And if I grab a fib, I don't think it did quite, so it went way above the 0.7686, all right? So it didn't respect the fib, it just went above it into this upward sloping wedge and then went straight down, okay, and then kaboom, down we go. So not quite the prettiest look for the S&P 500, okay, as you can see there. It is going up over time. It's pretty, pretty exponential and pretty reliable, this trend, until it's not, all right, until it breaks. And I want to see it break this level here, break down durably, all right, and that'll be it for the S&P, all right. And that'll be pretty well it. And if you look at the trend ribbon and you go on the weekly time frame, all right, as you can see, it's green, it's still green, okay, it's still trending up, nice and neat. On the weekly, you can see if it goes red, it's a downtrend, okay, like in 2022, we had 2021, end of that year, and then boom, it broke below this level, and then made a new low. It was a low, it was a lower low, a lower high, and the ribbon turns red. And it trends down, Then it's high here. I got broken, so it turned green, and then it went back below it. Okay, went red again, and then green, and then trended back up. All right, and this one here is nice trend up from the pandemic drop. If you went red, and then boof, you stayed green for a long, long time. When it turned red, you get out of the market. If it was a strong trend like this, but it does whipsaw up and down. Okay, as you can see there, goes down, goes up, and like a fake one there as it was still uptrending, went to red. So you can take it as you will. It's not the best indication, but nevertheless it is an indication. If I pull up the MACD on this weekly time frame, you'd see it's starting to really curl down. As the price goes up, it's starting to curl down. The price is looking to stall. Looks like it's struggling to get above the all-time high. And we're getting divergence, from this red line I've really drew on the chart. If you go on the indicator here, and if you go down, okay, that's going down, and this is going up, and eventually it catches up with the oscillator, and it'll drop too. So not looking quite neat for the S&P. NASDAQ, same sort of story. It broke below this level, okay, and this one obviously did, and it's coming back down to its low. It's like S&P got this low, and this one's a significant lower high than this one. So we're starting a downtrend and process on the daily, and it was down 2.5%. You go on the weekly, and you go on the trend ribbon, and look, it's just about to turn red on this one. Okay, it's been green for a bit. So you went red, the correction in 2023. But yeah, look, hitting the 10 and down, going downwards. And if you look at the MACD, as being on a downward trajectory for quite a while. So you got this red line here I've drawn to indicate divergence. And the divergence is high, 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 and high, high. You got this high, lower high, another lower high, as you can see there. And that's divergence. This 3 drive pattern on the weekly, 3 peaks. And then boom, we had this trend line. And we broke it, we faked out, it came back up. And then boom, we're breaking back down again with a big fat candle on the weekly. And the oscillators is really, really curling down. So not looking good for that one. NASDAQ. The Dow Jones transportations, not the industrial average. The transportation index, when this loads, it's pretty slow here, and you can see it's being in a big triangle. We want to count it from, if you go from end of 2021, end of that year, to September 2022, all right, and then came back up at here in July 2023, and then curled back down to start forming this triangle, right, and then October that year. With that correction, of course, started Q4, and now we came back up the top band of the downward line, the upward trend line, and we're starting to really curl up. We came back down in June. We faked out a couple of times on the daily, and obviously the day was terrible, 1.2%, and we came up. It looked like we were going to break higher, but it got rejected. And it's not looking quite neat for this one. And it's decision time. It's getting really, really curled up. It's calling up, essentially, and really squeezing this pattern until it's got to break to the downside or upside. All right, that's determination. If you go on the weekly, you can see a bit clearly. And it loads up very slow. And you can see it's nice and neat there. And yeah, we didn't close these candles up above this line. We failed. We actually did close, right, a couple of candles, and then boom. Didn't take long, and it's just absolutely got smacked yesterday. And if you look at the oscillator, the MACD, it's like to look at it all the time. And yeah, it's pretty well high, lower high, and lower high. So consecutive lower highs. We haven't crossed yet. And these ones are lower highs as well. Okay, so it's falling price. Yeah, it's looking like it's pretty bearish until we break the upside again. All right, so that is the decision, and where the markets really head is the Dow Jones Transportation Index. That is that one. A Russell small cap have been consolidating in this channel, all right, since December 2023. Up, down, nearly got to the top, and then sort of nearly got to the bottom. So really in between. It broke out of it, right? In July, it looked like it was going to go higher and then head to, higher levels back here in 2021, but it didn't get there. It went back down, and then it came back to try and retest, and we just smashed straight back down. We failed, made a gap there, went back to the bottom of this channel, and shot back up, broke it again, and then back down again. So it's really playing games, playing tricks on people, the small caps, and we're heading lower and probably head back down to this 2000 level and 993. I've marked these two lows, these two wicks to support, and if you want to see where we did retrace to, another interesting thing, if you go to the very top to the very bottom, all right, so top to the very, very low in November of 2023, and you can see where we retraced to is the 786 Fibonacci retracement, okay? We wicked to it and got rejected. And, it's the same level here. And then, these clusters here. That is very, very interesting. 786, okay? And, that is the very, very strong resistance level. It has to really start to turn around, or we'll just fall down and then just consolidate before just crashing lower to 926. And then if it gets really, really bad, I see it going down to the bottom, 1600, all right? So that's the Russell. And it's very, very weak-looking chart pattern. Now you go to the unemployment rate. So we did see a decrease, 4.2% from 4.3. So a little tick down. As you can see, historically, it does zigzag a bit, okay? It's a sharp, trend down. As you can see, it's not always flat. As you see, sometimes it is. It's nice and smooth. Also, it's rough. It's going to be rough like this. See, it's rough here, smooth, quite smooth here. Then it got rough, smoothish, sort of smooth, yep, smooth. So there's times where it's smooth he rises, and then rough he comes down. And also, it can, it's smooth up there, it's rough here, it's a rough grind higher, the early 60s, and smooth there, smooth there, in the late 40s, early 50s, late 50s, smooth here in 970, okay. But you see this rough period in the 80s, so it's not always a straight line up, okay, a nice predictable curve. It can zigzag for a bit until it takes off, all right. This could be the last real before it smoothens out, or we'll have to wait and see for that one. And then you have the SARM rule, okay. And obviously it is triggered. It was 0.53, right? Last month, and this month it's 0.57. So it's still durably above this yellow line. I want to see it continue to rise up to confirm that the recession is around the corner. Or if it does come down, okay, if you do break it to the downside, and this was a fake out, which is possible, all right, I'll show you. It worked here, recession here, 2020, worked here in 2009, 2002, 1990 recession, back-to-back 80s recessions, 1970s recessions, the early 70 recession, okay, the 61, 60 recession, the late 50s, early 50s, and the late 40s. So it worked every single time, but it did fake out here, okay, in the late 50s, and then came back down. So it can do the same thing. All right, I'm not saying it can't, but if we stay above this durably for a little bit of time, going into the year, we're absolutely certain the recession is on the horizon. Only a matter of time. So that is that one there, the SARM rule. And it's just a matter of time. It's just taking its time. It's slow grind, like I said, the unemployment rate. It's grinding. It's a very, very long process, okay? It's very, very long. So this is 2022, all right? So we're in 2024. So it's, May, that was middle of June, basically, until it flattened out and resumed higher. It's been 2.5 years, nearly, okay? So this takes a very long process. And when it takes off, it gains momentum. It's hard to slow it down. All right. The Fed will respond to it if it does aggressively shoot higher. If it's going to be slowly grinding, the Fed is not going to be too worried about it. But yeah, the panic starts when it takes off and it just becomes unbearably obvious, the Fed, and they have to step in and save the day. And the markets will just tank because the economy is not good. The jobs are the economy. People, the consumer, make up the vast majority of the economy, buying goods and services for these companies. You know, they need their customers, all right? If they're not getting customers, their sales go down. Simple as that. They lose their revenue. It's quite simple. The revenue numbers come down, less people buying. And suppliers too might cut back. If they're laying off workers, they can't keep up with the orders, and then it's a trickle-down effect. So yeah, that is the consumer and the jobs market and the companies to really see, if especially looking forward earnings, and then see if they're going to come in worse than expected and really not live up to expectations, especially this company here, NVIDIA, watching this like a hawk, see if it does miss expectations and see revenues start to decline or grow at a slower rate, I should say, and then they'll really mark the significant end of this AI craze, and it's all over. Same as Apple, Microsoft, Google, Meta. I don't think these will hold up quite well, but better compared to smaller stuff, but still I'll decline. Everything will go down. It's a stock market, eventually catches up to what the reality is, the economy. So that is what you look at for. So that is the video. All right, guys, I hope you enjoyed that one. Just going over the unemployment rate, the non-farm payrolls numbers that came out last night, which is quite critical. And non-farm was bad, came in less than expected. Unemployment rate did come down slightly, so that was okay. It's not too concerning yet, but it's in, it takes its time. It can slowly grind up. It can go up, down like a trend. It goes up more than it goes down, and then that's a staircase, and that is a trend up. So not out of the woods yet, but the Fed, we'll have to wait to hear from them in September, mid this month, to see if the cut's going to be aggressive or soft, so 25 basis point or a 50 basis point cut, to see if they're really freaking out about it at the moment, or if it's not too much of an issue for them, they'll just cut a very small 25 basis point. And we'll also look at some charts like Bitcoin and where I see it heading eventually. Even if it's a soft landing, we don't get a recession. I don't see that. I still do see a recession, but if we don't get a recession, I still see it declining like it did in 2019. Okay, it did have a soft landing there, but it did decline after the Fed cut interest rates. Okay, that's when the Bitcoin topped, and then just mid-cycle top, and then it came down. And a slow bleed until it shot back up again. That's the Fed pause rates, and then they slam rates, and the prices went boof, nosedive. Okay, so they were way behind the curve. That is that. That was a pandemic, so it was a black swan event. Very short-lived recession. And yeah, we'll see if it's a soft landing or hard landing. I do see a hard landing coming though, unfortunately. The jobs and on-farm job openings look terrible. It's not quite rosy, and the down revisions, the jobs numbers, 17 times in a row. I think 11 out of 17 are downly revised, so very, very bad job revisions. And yeah, that is looking nasty. But inflation is coming down, according to the Fed, and that is what I want to see. So one going down and unemployment going up gives them the reason to cut rates, okay? And yeah, looked at other charts, stock market charts, and unemployment rate and SARM rule to see where we are with those ones. And yeah, the SARM rule's still above the zero line, which is bad. And that is the video. So if you enjoyed this one, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you in the next one. Cheers.